Okay. So to kick things off, I'll start with an introduction of the Private Financing Advisory Network. And to do that, I will first play a short introductory video about who we are and what we do. And then we can go on from there.
Climate change is one of the most pressing issues of our time. Increasing temperatures, rising sea levels, and extreme weather events are growing ever more common. What can we do about climate change? Innovative business models for clean energy and climate adaptation are a big part of the solution. Plenty of entrepreneurs have great ideas on how they can make an impact. However, it can be challenging to find the investment to get their projects off the ground or to grow their businesses. That's where PFAN comes in. The Private Financing Advisory Network is a global network of climate and clean energy financing professionals, offering free business coaching and investment facilitation to projects and businesses in developing countries, bridging the gap between investors and developers. The PFAN journey begins with an entrepreneur submitting a project proposal, detailing their investment needs. We select high potential projects or businesses and map a pathway to investment. The next step, business coaching, is at the heart of PFAN. We appoint an expert consultant from our network to provide targeted and unbiased one-on-one advice to help entrepreneurs refine their business plans and financial models, something which plays a key role in attracting financing. Once entrepreneurs are ready, we introduce them to suitable investors and, if necessary, provide further support to help make the deal happen. PFAN is funded by our donors, enabling us to provide these services for free. Only projects that successfully attract investment as a result of PFAN support will pay a small success fee to help more entrepreneurs to benefit from our services. If you're an entrepreneur developing a project or scaling up an existing business in clean energy or climate adaptation, a consultant who wants to share your expertise, or an investor looking to make an impact, we would love to hear from you. Let's work together in creating a cleaner, greener planet where businesses are part of the solution.
So with that, I'll just go into a quick presentation of what PFAN has to offer. Some of you on the call may have heard about us before, some may not have heard about us before. But basically, through this session, we hope to be able to provide more insights into what we do. So the Private Financing Advisory Network, let me go into full screen. I hope my screen is visible. Is a business advisory project support facility. We basically advise low carbon, climate resilient businesses, particularly in developing countries, and we help match them with appropriate financing. So our role is an intermediary sort of between projects and businesses on one hand. I say projects and businesses because we work with projects such as power generation projects, solar projects, hydro projects, and so on, as well as businesses, so traditional business models where you're making a product and you're selling a product and you're earning some revenue. But basically, whether they're projects or businesses, they have to be in the area of climate. So whether it's climate mitigation, as will be the case with clean energy, or climate adaptation or climate resilience. And we basically do this to basically attract more private capital financing towards such projects in a bid to tackle the SDGs, particularly 7, 9, and 13. That's energy, industry, and climate action. And we work with partners as well, and also the Paris Agreement. So we started off in 2008, and since then we have managed to, the numbers here, as you saw in the video, have gone up. We now have about $1.7 billion that have been supported, or projects that have been supported to raise capital through that period of time. We work basically across the globe in the frontier and emerging markets, particularly in the Caribbean and Central America, Africa, Eastern Europe and Asia, and the Asia Pacific region. In Africa, we have three sub-regions, that is the Western Africa region, Eastern Africa, and Southern Africa sub-regions. And of course, this website is hosted particularly by the Eastern Africa sub-region. Our value proposition, as I already hinted at earlier, is basically bridging the gap between, on the one hand, a limited supply of investor-ready projects. There is sufficient supply of projects, but not all projects are properly structured to attract investment from investors. So on the one hand, we have a limited supply of investor-ready projects. And then on the other hand, we have low levels of investment that are being channeled towards climate action, particularly private capital investment to the regions in which we operate. So we act as a bridge, one, developing the projects, and two, matchmaking and building the investor ecosystem around clean energy and climate financing. Our theory of change, we do three basic things. One is supporting projects or businesses to develop investor-ready business plans, financial projections, pitches, and so on. Facilitating investor projects to finance or investor matchmaking, and building project pipelines and portfolios for large-scale investments. So those are the three pillars of what we do as PFAN. And we hope by doing this to unlock frontier markets for climate action or business models that have a climate action angle, mitigating investor risk. So as many might appreciate, the perception of risk in some of the markets that we're operating in, definitely in sub-Saharan Africa, tends to be on the higher side. So we work with projects to help mitigate the perceived investor risk in those projects. Building financial service ecosystems, and I'll mention something about this later. We basically work through a network of financial service providers, advisors, we call them, in the market to provide our services to projects, and disseminating best practices on climate finance project structuring and other best practices that can be adopted by projects, investors, and other facilities such as ourselves. We are basically, in terms of our market positioning, our core value proposition is around project preparation, market creation, and de-risking projects. On the one hand, we also work with earlier stage kind of seed funding, prototyping, or earlier stage financiers, basically to adopt projects that are coming from that level. And our output goes towards presenting projects to the higher investors and facilities, particularly DFIs, regional development banks, and so on. And we also work hand in hand with other players in the market that are more on the technical side. Ours is more on the financial and business and commercial side. I'll mention again about this in a minute, but basically our model flows through, we call this the PFAN project pipeline. We originate projects. We receive projects on a continuous basis through the quarter. If you're a project developer out there, you're very welcome to send in an application, and we'll, towards the end of this presentation or towards the end of this webinar, give you information about how you can apply for PFAN support. On a quarterly basis, we'll select projects, we'll make an evaluation and select projects, and those projects are inducted into our pipeline, either as development projects or investment facilitation projects, where development projects are earlier in the process and require more hand-holding to get them to investor readiness, and investor facilitation projects are projects that are mature enough for us to take to the market through either investor forums, roadshows, and investor introductions, and hopefully getting them towards financial closure. We provide our services at this level at no cost. That is, we have our own internal network of consultants that we use to provide these support services, and so we don't charge a business for that service that we would offer them. Our work is mainly to ensure that the matchmaking has been done and the projects are able to get the support that they require. The services that we offer include one, originating projects, and then two, developing a business pipeline or projects under which we offer various services, including business coaching, preparation of business plans, investment structuring, structuring the ask, preparing investment marketing materials, investor memos, and so on. And then helping projects basically get to the investment facilitation stage, where the work is mainly revolving around matchmaking with specific investors, ensuring that the project is appropriately structured, and providing transaction advisory towards negotiation and closing. In terms of our project selection criteria, or the projects that we work with, this is a quick overview of the selection criteria that we have. Our ideal projects are sized between $1 million and $50 million. We, in some instances, will work with projects below $1 million, particularly in the rural electrification, energy access, and climate adaptation fields. And we have also worked with projects larger than 50 million, but our ideal positioning is in the $1 and $50 million range of projects. We will work with greenfield projects, particularly on the climate mitigation side, and scale-up projects where we're talking about business models that are beyond the early stage startup level and are now looking to grow. And it can be their first round of financing, of external financing, or greater. We will be looking for clean energy projects. We have a special focus on cooling as well, in partnership with the Kigali Cooling Project. And we also have a focus on projects with adaptation benefits, specifically in the sectors listed on the far right, that is agriculture, ecosystem services, forestry, urban development, health, water, and so on. Just before I invite our first panelist to make a presentation, I also want to make mention, or at least share this slide that gives an overview of what our business model is, or what our delivery model is. Once a project has been inducted into the PFAN pipeline, the project will go through 3 stages. I think I've already mentioned this, but I wanted to give some more detail of what happens at each stage. So stage 1 is what we call action planning. Stage 2 is project development. And the 3rd stage is investment facilitation. At the action planning stage, our key need or key action will be working with somebody to determine what the terms of reference should be, what the project is going to be working towards, and what the advisor will be assisting the project towards. The advisor will also make an assessment or an evaluation of the project to determine whether it should be a project development category or an investment facilitation category. In the project development stage, we basically offer services that should result in improved business plans, financial models, a finalized investment structure, and basically being at a place where we can say you're investor ready. And there are many details that go towards that assessment to determine that the project is investor ready. And then finally, it could be that the project was mature enough to go straight to investment facilitation, or it went through this project development phase, but then at the investment facilitation stage, being able to now finalize the investor presentation, identifying specific investors, and then going through the process of marketing the project, engaging investors, and supporting the project through negotiation. In between the 2 stages, we require projects to enter a success fee agreement with their advisor. And this is particularly because PFAN works, we are a facility that is designed to work through the market or with the market, and not outside the market. So we use people who are already in the market offering these services, and where possible, enabling the market through its own commercial mechanisms to determine prices for things such as success fees. All the other services we offer are at no cost to the project, and we pay fixed fees for the consultants we work with. So I should also have said, if you have any questions, please use the question and answer facility at the bottom of your screen, and just send a question. We'll be answering them towards the end of the presentation. With that, I will now hand over to Eric Magu, who is, as I mentioned earlier, we're joined on this webinar by 2 of our close friends, I should say, or investors that we are privileged to have interacted with constantly and consistently over time in Eastern Africa. And that is Kenya Climate Ventures and Camco Energy. And so I will be inviting Eric to basically introduce Kenya Climate Ventures. And also, if you have any questions for him as we go ahead, just put them on the Q&A section and we'll be able to answer them over time. So Eric, please feel free to share your screen and take it away. Thank you.
Thank you, Wilfred. Thank you, Wilfred, for that. So I'll take you through Kenya Climate Ventures, which for us, we are an investment company that is targeting climate smart enterprises. So let me do the presentation. So basically, I'll start off and just a brief about Kenya Climate Ventures. For us, we usually target, as I've mentioned before, climate smart enterprises that are in 5 thematic areas, which we believe are some of the areas that are greatly affected by climate change. And one of them is agribusiness, water management, commercial forestry, renewable energy, and waste management. So we do make investment in that is tailor-made to each of the companies. And with that, we try as much as possible to, as we invest, we also have a package for technical assistance and also business development services. Because as we target companies that are in early stage and also growth stage, and we know that there are certain things that we need to really fine tune for that business to be able to unlock the growth potential. So each of the investment has to be tailor-made, and also we try as much as possible. Yes, at the point of investment, we have identified those technical assistant areas that we are going to address in the next 100 days post-investment. But during the investment horizon, the TA still continues to be accessible, and it is usually based on a need basis. So each and every year we have to sit down and make a plan or even conduct a gap analysis. As the business grows, then there are certain challenges that come their way, and we try as much as possible to work together with the entrepreneur towards addressing those challenges. Currently, the way we have positioned ourselves in the market, we try to see ourselves past, we are not providing grant capital, but we are trying to offer soft commercial funding and patient capital to companies that are in the validation and growth stage. So in a nutshell is that we rely on other ecosystem enablers, that is Kenya Climate Innovation Center, other accelerator programs like Growth Africa, AECF, in terms of our pipeline, and also in terms of also from PFAN. So once we receive deals from those other ecosystems, or even directly from the entrepreneurs, we actually evaluate them against our investment criteria, with the hope that once we are able to unlock the growth potential for these companies, because they are still early stage, they are now transitioning to the growth stage, they can be able to more like have follow-on investors. And some of the people we target after we have invested our capital are actually other big players in the sector. And that's where the AHL, Novastar, Energy Access, Sun Funder, all of them come now for scaling up of the business that have really grown, or we can say outgrown the growth path that KCV we are in. And that way we can be able to have a successful exit to the business, from the business. So in terms of our product and services, we have 2 forms of funding. One of them is early stage financing, which is targeting companies that are really past proof of concept, and they are now ready for concessional investment, either in terms of straight debt, convertible debt, and also if they are inclined to equity, then we can also partner with them as equity investor. And also in terms of the investment horizon, we are looking for all these convertible, all these investment instruments is up to a maximum of 7 years. Then if we were to go to the ticket sizes, then for early stage, we are willing to commit up to 200,000 with a minimum ticket size of 50,000. And now going to the details of differentiating early stage financing and growth stage financing. For early stage, one of the key metrics we usually look at is the revenues. That is the companies that are really doing less than 150,000 USD. And in terms of profitability, we understand companies in early stage, they are yet to break even. So that is not really key for us, provided we see there's the potential to grow this company in the next 1 or 2 years to turn them into a profitability position. Then the other investment mechanism we have is the growth stage. These are more of companies that have really validated their business model. They are past the early stage. They are looking for that soft capital to unlock the next phase of growth. And for them, we are looking again, the same investment instruments, convertible loan notes, equity, and straight debt as well for some. And then the maximum tenure is 7 years. And we try as much as possible to, as we structure the investment, we try as much as possible to tailor make investments in such a way that it will not really constrain the company cash flows. So as we structure the debt, then we usually say they are concession debts, because in terms of the pricing, if you were to look at the market rates that are out there, we usually offer slightly below the market. So we are not giving debt at the same level the commercial banks are giving, or even other potential funders for the businesses are giving. And then in terms of the ticket sizes, this is between 100,000 US dollars all the way to 1 million. And as I had mentioned before, is that this comes with an integrated technical assistant and business development services that is offered by KCV. This can take two approaches. We can co-fund the TA together with the entrepreneur, or if we feel that we can be able to take that up, then KCV will be the one to bear the cost. Then we look at our investment portfolio. Our investment portfolio is quite diverse. So far, we have committed up to $3.2 million to 15 enterprises. And this, as you can see on the right-hand side, is that our portfolio has so much be into agribusiness. And also we have renewable energy, that's Off-Gen, who are doing CNI projects. And also we have Systema Bio, who are doing commercial biogas systems. And then the other, we have Rafford, which is more doing household solar item or home systems. And then in terms of waste management, we have 3 of them. That is King's Biofuel, who are doing commercial briquettes from sawdust, coffee husk, and rice husks. And then we have Kunisafi, who are doing bagasse briquettes. They are based in Bungoma County. Then the other waste management company is Adash Polymer. For them, they are doing conversion of plastics to Safi HFO, which is an alternative to diesel and other forms of fossil fuels that are usually mainly to power industrial boilers. Then in terms of the impact, we are looking at improving livelihoods for over 5,000 farmers, access for clean cooking for 3,000 households, and then for the off-grid, that is the renewable energy, we are looking at 1.5 megawatts. And we also target to create over 300 jobs, which are sustainable, in that these are businesses that can actually sustain business, that is past KCV, post KCV investment, even after exit, those jobs will still be sustained. In terms of finances leveraged, we are estimating to leverage around 3 million for follow-on investors. As I mentioned earlier before, is for us, we see ourselves as people who are coming in the gap between the accelerators, the incubators, and then the people who are really funding much larger ticket sizes. So in terms of leveraged funds, that is one of our impact matrices. And then in terms of membership networks, we have Global Impact Investment Network, we have PFAN, Capria, and Cleantech, and Collaborative for Frontier Finance. And this is more of making sure that we are actually creating impact to the businesses we are investing in, and also at the same time is for us to be able to share information with other ecosystem enablers, and also enable us also to leverage for funding for our clients. I think in terms of our people who are funding KCV, Kenya Climate Innovation Center is the major shareholder, or we are a subsidiary of KCIC. And then initially KCV was funded by the World Bank through InfoDev, and also Danida, who are also one of our investors. So in a nutshell, that's about KCV. And I would encourage people to, if you have any questions, you can put them on the Q&A section, and then we shall be able to handle them towards the end of this webinar. I think my presentation comes to an end there. And
thank you.
Yeah.
Thank you, Eric. Thank you for the introduction to KCV. Again, for the benefit of our participants, the theme of this session is Meet the Investor. So the idea is to expose or give you an exposure to some of the investors who are there, particularly in the areas of clean energy and climate. So that was Kenya Climate Ventures. And next I'll be introducing Adam Fitzwilliam, who is an investment associate with Camco Clean Energy, for him to also give us an overview of what they have to provide as far as climate finance is concerned. So very welcome, Adam. Please feel free to share your screen and take it away.
Excellent. And thanks, Wilfred, and also Eric, for the invitation and the opportunity to present at this session. Let me just quickly share my screen. Okay. So hopefully you can all see that now.
Yes, we can.
Excellent. Okay, so firstly to briefly introduce Camco Clean Energy. So as Wilfred said, my name's Adam Fitzwilliam. I'm one of the investment associates here at Camco Clean Energy. Camco is a climate finance manager that was established in 1989, actually here in Nairobi. And over the last 30 years, we provided over 15 billion worth of climate finance globally. More specifically to the region, since 2015, Camco Clean Energy has been the fund manager for the Renewable Energy Performance Platform, or REP, which is a 148 million sterling fund, which was established by the UK government as part of their climate commitments. And that's currently making up the bulk of what we're doing in the region so far. Okay, so a little bit more around Renewable Energy Performance Platform. So as mentioned, it's funded by the UK government via the Department for Business, Energy and Industrial Strategy. And it was established in 2015 between the UK government, European Investment Bank, and the United Nations Environment Programme. REP is really designed to accelerate the adoption and scale up of renewable energy in sub-Saharan Africa. It is, as mentioned, it's a publicly run program and really designed to accelerate projects and companies that are relatively early stage in scaling their renewable energy projects and companies. So the focus of REP is really on small and medium scale renewable energy. And the way that we define that here at Camco is up to 25 megawatts in terms of projects for all renewable energy technologies, with the exception of wind, where we will consider projects of up to 50 megawatts. So looking at what REP can actually provide. So the REP concept is a very flexible one. So we don't have a specific product that we look to fit into an investment. And by that, I mean, we can do debt, equity, mezzanine, convertible loan notes, etc. The only product we can't do at the moment is grants. So we can't do grant funding. But really, shifting the focus away from products, we're more focused on, what is it that this project or this company requires in order to get it to scale and to reach profitability. So how do we build sustainable business models and projects in sub-Saharan Africa? So looking at the kind of project life cycle, we can provide capital in the development stage, whether that's development loans or equity. So to support some of the studies that are required typically by financiers at financial close. Through our network in the region, we can also provide access to risk mitigation products. So the likes of those provided by MEGA, ATI, and the likes in the market to get over some of the market failures around, non-payment or delayed payment, or even some of the political and instability risks in some of the jurisdictions in which we operate. And then moving on from the development stage of the project, we can also provide funding at financial close. Again, that can be debt or that can be equity. And really that funding is designed to support the construction of projects and to support them in reaching commercial operation. So that's what we call gap financing. So we really see REP's role as an accelerator of projects and companies who may struggle to gain access to the private investment markets due to being early stage and high risk. And REP has a mandate to take risk and to invest in early stage companies. So perhaps interesting to those on the call at the moment, I just thought I'd outline some of the drivers of appetite for us when we look at making an investment decision in some of our projects. So first of all, in the countries that we operate in, we're looking for positive macro trends. So by that I mean the likes of supportive policy and regulatory environment. A government that is supportive of private sector participation in the energy markets, etc. And also, and particularly relevant at the moment is, what are the supply and demand characteristics in the countries that we operate in? So, is there excess supply on the grid, or are they actually looking for new renewable energy capacity? And similarly, in the off-grid space, which we also support, are there protections in place to support private investors should they wish to innovate and roll out any off-grid solutions that address energy access? Secondly, we'd look at the team. So what is the composition of the team that is being presented to us? What are their strengths? Are there any skill gaps? And can we help them fill any skill gaps to make their proposition more credible? Thirdly, we're interested in what has this company done so far. So have they established any traction in the target market? And crucially, do they understand the markets that they're operating in? So, we're looking for entrepreneurs and projects run by teams that have a deep understanding of the markets in which they operate. That leads quite nicely onto my next point, which is the track record. So ideally, it would be a team with a track record, and also a project with some traction, or a company with some traction. Now, as I said on the slide, this is not essential if there's a very compelling reason to make this investment anyway. But certainly, if there's no track record, we'd be looking particularly closely at the team involved, and just making sure they have the requisite skills to bring this project or this company to fruition. The next point is a common pitfall for some of the earlier stage companies and projects that we look at, and that's just making sure you have the right information available, and that it's up to date and of sufficiently high quality. So from our perspective, the easier you make it for us to understand your business or your project, the easier it is to arrive at a decision as to whether we want to progress or not. All the time we see pitch decks that are incomplete, or for example, reference dates, target dates for commercial operation that were 3 years ago or 2 years ago. And really this just leaves, a poor impression on the investor that you're keeping your live investor documentation up to date. Next, and key for REP is this scalable? So for us, as mentioned before, we're looking at projects and companies that can deliver, up to 25 megawatts or up to 50 megawatts of capacity. So to the extent, particularly in the off-grid space, that we're looking at projects that are significantly smaller than this, I guess the key criteria for us is how scalable is this? How quickly can we reach, utility scale, which we would define as, above 1 megawatt. So that's very, very key for us. Again, just in the off-grid space, we're very interested in unit economics. So making sure that the entrepreneurs thought through to a very fine detail, what are the unit economics? So for example, what is the number of sales that are required to be made in order to make this company profitable? And really laser focused on the unit economics of the product and on the scale of it as well. And then the last two are just two key criteria that are, from REP in terms of our mandate. One is, would our funding be additional? And by that, we mean, would the private sector be providing it? And if they would, then perhaps this isn't one for us. So our role is to try and unlock private capital and leverage private capital as opposed to crowd out. So additionality for us is very key. So the entrepreneur or the project demonstrating that, without rep support, they would have, it would either take longer or they wouldn't be able to scale their proposition and bring it to market. And then the last criteria from REP's perspective is around transformational change. So by investing in this project or in this company, what does this mean for the broader sector? How are we moving the country forward in terms of the renewable energy sector? Are we advancing the agenda? Are we reducing perceived risk? Are we increasing appetite within the government to try and accelerate bringing some of these projects to market? So for us, we need to take a more holistic look at the country and the project as well, and ask ourselves, does this investment contribute towards transformational change? Next, just onto a very quick snapshot of the REP portfolio so far. So as you can hopefully see on the slide, we've committed about $75 million so far, and that's across 22 projects that are being contracted by REP. From a technology perspective, we've got projects across geothermal, hydro, solar, wind, and also in the mini grid and solar home system space as well, we're very active or have been historically. Improved energy access to 7.9 million people. So again, this speaks to REP's focus, which is to accelerate the adoption of more sustainable energy solutions, and also, very much energy access focused, and using renewable energy to solve some of the energy access challenges that are faced in many of the countries in which we operate. And then I believe this is my final slide, but just wanted to share some examples of some of the transactions we've done in the sector. And just to really demonstrate that we're very much active both in Kenya and in East Africa more generally. So for example, we invested in Virunga Power, the run-of-river hydro developer based in Kenya. So that was a convertible loan note of 2.5 million that we provided to them. We've invested in PowerHive, which is the solar hybrid mini grid provider, also based in Kenya. And we provided support by way of debt to support some of the construction of the mini grids. A similar story, except it was a convertible loan note to Arc Power, again, a mini grid developer based in Rwanda. And PowerGen also, again, another mini grid developer based in Nairobi. So we participated in their Series B fundraising round last year. And then taking a look at projects more generally. So Clean Energy is I think it's a 6 megawatt run-of-river hydro project based here in Kenya. So we're looking at providing both development finance and construction finance to bring that project to fruition. Marco Barrero, we provided equity at construction stage. So again, this is a Kenyan project, has the potential to be the first privately owned IPP in Kenya, being developed by 2 first-time Kenyan developers. Again, we supported them because we saw some real traction in what they were looking to achieve. And then finally, just slightly further afield, we supported the Mwenga project and the Mabuga project in Tanzania and Burundi, respectively. So Mwenga was a 2.4 megawatt wind project that connected to a rural grid. And then Mabuga was the first solar IPP in Burundi, which was being developed by Gigawatt Global. And again, there we supported with some development funding and also some construction funding to bring that project to commercial operation. I think that's the end of the formal presentation, but just so everyone has my details, feel free to drop me an email if you had any follow-up questions based on the presentation. And I look forward to the Q&A on this current session as well in due course. Back over to you, Wilfred, and thank you.
Thanks, Adam, for the presentation. So we will, I think we have about 15 minutes left towards the end of the presentation. Excuse me. And so I'll open it up for Q&A. If you have any specific questions, again, just use the Q&A facility at the bottom of the screen there, where it says Q&A, and you can send a question. We have a few questions, and I'll ask as well a few questions on my side, just real quick, as we have a short period towards the end of the call. The first, we have 2 questions on whether the presentations and the recording will be made available. So I can commit that we will send a follow-up email, possibly with the presentations or some collateral information from each of the presenters from this session. So just look out for that. The recording might come out a bit later, but we'll also endeavor to provide the recording for the session as well after possibly the editing or reviewing the recording. But definitely we'll give you we'll follow up with an email with either the presentations or the relevant information from each of the participants on this call. That's ourselves as PFAN and Kenya Climate Ventures, as well as Camco. We have a question here for KCV, so I'll ask possibly Eric to answer. And the question is, what are the interest rates that KCV offers? I guess that's in terms of debt. So maybe you could give us a range or what your debt terms generally are. Eric, please feel free to unmute and answer the question.
Yeah, for the current portfolio of investments, we have our interest rate at between 8 to 12%, and that is on the Kenya shilling.
Okay.
And then in terms of the other instrument, the other terms is if it's a straight debt, then it's on a reducing balance. If it's a convertible, then we have an arrangement with the entrepreneurs where they pay a portion of the interest, while the other portion is accrued in readiness for a potential future conversion to equity. Thanks.
Thank you. Another question here is, are there financing options? And I'll open it to either KCV or Camco. I guess it might be more relevant for Camco in this case. The question is, are there financing options for companies in agro-processing wishing to run off-grid energy operations, i.e. funding to make the processing plant run off-grid?
Sure, I'd be happy to take this one, Wilfred. So there are. I think there's an increased focus on off-grid solutions more broadly in the sector, and there are two mechanisms to facilitate this. One, you have the likes of rural mini grids, which are looking to support both residential and also C&I customers in rural jurisdictions with renewable sustainable power. And through the REP facility, we do a lot of support for mini grid developers. And also, we've invested in both mini grid developers and also in mini grid projects across Kenya and elsewhere on the continent. Now, if it's contracting directly with a business, so a single off-taker, which is a business, there are also solutions in the market at the moment. And we're actually, as Camco, outside of the Renewable Energy Performance Platform, we're actually, we've recently raised some seed funding to support more captive solar and energy efficiency interventions for off-grid companies and also grid-tied companies as well. So I'd be happy to pick that up separately with the individual who asked the question, if they'd like to discuss that further.
Thank you. So I'd also request for all of us on the call, that is Adam, Eric, myself, as well as Patrick, please share your screen on the chat. Send your contact details, at least your email address on chat. I've seen a few questions asking for contacts. So just maybe put your email address there, what your title is, and your organization, so that anyone who wants to reach you directly can reach you post-call. So just share that on your screen, or sorry, on chat. Then I have just two questions generally, one for KCV and for Camco. And I see for KCV, Victor Ndege, who's the CEO at KCV, has also joined us. So feel free to answer this one. I just wanted to get an overall, KCV has a good amount of investment in the ag industry, agro processing, and so on. And I just wanted to get a feel from you on what you find some of the key considerations are for businesses or projects in the ag processing sector to, the success factors that you think are necessary, particularly towards investment. So maybe 1 or 2 points from you on that.
All right. Can I take that, or
yeah, please
you are targeting Eric with it? Yeah. So Eric,
no, I was actually targeting on this one. So please go ahead.
Yeah, and Eric will add in case there's anything left. So I will start by appreciating this event. It's a very good one for us as KCV, because we are rebuilding now back into the market to be able to provide the much needed financing for climate businesses. So I will answer this in 3 ways. One is that if you look at sector development, the level of sector development as far as climate financing is concerned, you would realize that the agribusiness sector is much more developed in terms of bankable enterprises, in terms of clarity and information about how the value chains and the business models operate, and in terms of how the investors can actually get involved. So the bias here is to what extent the sector is developed for the financier to understand and be able to evaluate and value all the risks possible, and possibly put in their money with the information that is a lot more detailed. So that is a step ahead from from the other sectors if you compare with renewable energy and the various business models under renewable energy and how the industry works. And then number two is that there has been a lot of investment in the, the lower side of the agri value chains, that is production. And that is the main focus normally with a lot of development financing. And so this has given, the upper side of the value chain an opportunity to pick up very fast. So agro processing currently is very much selling. And if you look at the KCV portfolio for now, you'll find that there is a lot of investment that has gone into agri, and within agri, it is mainly agro processing to explore both the local and the export market. So that kind of leverage has been possible for agro processing company because there is a lot of investment that already happened downstream in the production of raw materials that they really need. And considering that Kenya is predominantly an agriculture economy. Then a third item is about the networks and leverage that exists in the agribusiness market. So it's very easy, for instance, to find a co-investor in the agribusiness space as compared to finding a co-investor, let's say, in waste management currently or commercial forestry. So most investors find it very like risk managed to be going along with other investors, and this happens mostly in the agribusiness space. I must also make it clear that in these cases there are also certain businesses which are still starved with financing, like the retail level agribusiness enterprises, which are mainly targeted by development finance. But by and large, you find that sector a lot more developed and evolved. And that is what most investors are looking at when we are getting into continuous and regular investment in the sector. Back to you, Moria.
Thank you for the comment. So the other question which I'll make for Adam's comment in this case is on the other side in terms of climate mitigation in the energy sector, particularly here in Kenya. And from an investor perspective, perhaps you could give us a comment on some of the market dynamics that we have been seeing and what your perception is as an investor to some of the changes that we've been seeing in the market dynamics. What's your view of the power market in Kenya, and particularly for clean energy?
Sure, thanks, Wilfred. So I think it has evolved a lot. I think that there has been a real corona effect, certainly over, between March and now, where there's been significantly suppressed demand on the grid, which has led to perhaps a slowdown in getting some of the power purchase agreements signed for some of the grid connected projects. And I think, more generally, because of some of the challenges that COVID has meant to businesses and to individuals, perhaps collections have been somewhat lower for the likes of KPLC. So I think, speaking frankly, it's quite a challenging time to bring your grid connected project to market in Kenya. And I think to the extent that you have a signed PPA, particularly in the solar and wind space, then I think there is potential financing available. But I think for some of the earlier stage developments, particularly in wind and solar, where I think there's less appetite at the moment for new generation with those technologies, I think, unfortunately, the next 12 months are relatively uncertain. And I think there may be some delays in getting projects approved, licensed, and bringing them to market. Now, we are seeing some traction in the small run-of-river hydro space. And I think their KPLC are eager to support some of these projects as they provide useful grid stabilization services, particularly in rural areas, to try and stabilize some pretty volatile, frankly, distribution networks. So there we are seeing some traction. I think more generally, given the supply and demand dynamics in Kenya at the moment, I think a lot of the power is with the utility KPLC on pricing. So I think there's definitely been some downward pressure on pricing that we've seen in the last 12, 18 months. In the off-grid space, I think it's a slightly more happy picture, if I could say. So I think there's still a lot of activity. I think Kenya remains one of the hubs for off-grid energy access entrepreneurs and startups. I think it's still very much a lively place. Again, I think there's been, some COVID challenges in terms of, suppressed demand for mini grids, and even in the solar home system space, perhaps some delays on payment under some of these schemes. But I do see, a continued need for some of these off-grid solutions, and we are continuing to see entrepreneurs in this space continue to grow and scale, despite some of the more challenging, broader macro backdrop in the country. So that would be my 2-minute overview of how we're looking at the sector, Wilfred. But I'd very much welcome insight from some of the other panelists, or indeed some of the participants.
Yeah, thanks for the comment. I think it's a good overview. I've seen a number of questions coming in, and we're already running short of time, so I'll beg your indulgence. Perhaps we'll extend the session for 5 more minutes and just tick off some of these questions. So Kimani is asking, I'm working on a productive use energy that's enabling agricultural produce in urban markets. Therefore, we handle various components. Will KCV and Camco be of support? I'd say on that question, please use the contact information to reach them or reach us, and then we'd be able to determine whether the specific circumstances of the project, and whether either of the investors on this call or any other of the investors that we are in touch with as PFAN will be in a position to help, or whether we can help you get to a place where you're investor ready or where your project is investor ready. Is KCV, perhaps for KCV really quickly, yes, no, is KCV doing anything in marginalized regions like Turkana? KCV, perhaps Eric, are you doing anything in Turkana, or is Turkana in your scope?
Yes, right now we don't have any investment for a company based in Turkana, but we're already reviewing one. So that's how far we have gone. Okay, yeah.
Great. So I guess Justice Miller, please feel free to reach out to KCV. I guess the answer is they're open to do business there if there's a viable opportunity, of course. And then final question from Juni. Hi, Adam. What is your appetite in waste to energy?
Sure, thank you. So we do have some appetite in waste to energy. We haven't yet done a project in the region. We're certainly open to looking at proposals. I think the challenge from a rep perspective is we require it to follow the EU waste directive, which is that waste should first be recycled. Well, sorry, waste should first be reduced, then recycled, and then only any residual should be moved to incineration for energy. And unfortunately, so far in sub-Saharan Africa, we haven't found a credible enough, waste management system to fulfill that criteria, which was set by our investors. Now, to the extent that there is, an entrepreneur can demonstrate that those processes are being adhered to, and particularly that there is a solid supply contract with a waste provider. Then certainly it is something we would consider. But I think particularly in waste to energy, we would generally only take a look once a feasibility study had been done, because I know that waste to energy projects are very sensitive to the content of that waste and the calorific value, etc. So if there's a detailed feasibility study, if there's a credible supply, long-term supply agreement for waste, and there's evidence that the EU waste directive can be followed, then certainly we'd be happy to take a look.
Great, thank you. And perhaps just as a follow-on, Adam, you had said earlier that you provide development stage financing. So at what stage are you able to provide development stage financing? From what level? You just mentioned pre-feasibility, feasibility level stage. So where would you feel confident to come into a project that's still under development?
Sure. I think it really depends on some of the other stuff that we've discussed, Wilfred. So if, for example, we're in a country, so we're actively looking at some opportunities at the moment in the DRC, in Madagascar, in Burundi, for example. in these markets, there's chronic shortages of power. So, the general market dynamics are favorable for bringing new renewable energy online. So I think in these markets, we're happier to take a look at perhaps an earlier stage and take some more development risk, because we think there's a more viable route to market. I think the challenge is in countries where there's excess supply at the moment, and as we all know, this changes. Year on year, this changes. So it's a dynamic. The market is dynamic and can change, but in markets where there's currently an excess supply, we're more reluctant to take early stage development risk. And the reason for that being, we do envisage some challenges, one, in getting power purchase agreements signed, and two, in those tariff negotiations, if there's a glut of potential projects and the utility doesn't need to procure much supply, then inevitably it has downward pressure on tariffs, which is great for the end user, but as an energy investor, you need to make sure that the economics work and can be sustainable as well for the capital providers.
Great, thank you. And so I think we'll move on from there. If you have any other questions, I think the contact details have been provided via the chat facility. Feel free to get in touch with any of us. And so as we come to a close, I'll invite Patrick Thimba, who's PFAN's country coordinator for Kenya. I don't know that I mentioned earlier, but I basically work as the regional coordinator for the region covering the Eastern Africa region. Patrick Thimba is our local representative here in Kenya. So Patrick, please feel free to take it away. I can share the slides for you, or you can just go ahead and make a comment about how prospective applicants can come into PFAN and benefit from PFAN's support towards their fundraising goals. So please, Patrick, feel free to share your video or unmute and go ahead.
Thank you so much, Wilfred, and thank you for the presenters and the people who have tuned in today's webinar. It's very easy to apply to our services in PFAN. You'll be required to log in to our website. If Wilfred, can you share with me the page for the one for just for application? If you have a project which meets those criteria, that's where we are. You log into our website, www.pfan.net, and there is a very user-friendly. Wait a minute, I don't know why. Wait a minute. Okay. Yes. So when you log in there, you submit your application at the apply now, and from there you'll be able to. When you register, there are some details you give in the website, like where they are, the company, the organization, the address, and when you complete the registration, you'll be given. You'll be acknowledged, and then you will be given a link to our Climate Invest portal, and where you now, this page where you are, you get with your email address, you get your password, and from there now you will be able to present your project there. All the details you have to fill in all your details, and then there's the information that you will be required, the name of your organization, the project name. We require the project financials, the document will be there, and the executive summary, the cash flow model. Then from there, they will be able to, you'll get a response. And this is a criteria that we're able to evaluate your project. The score is on the right. You can see it will be very important to know that the proposition you have, the model, the market, the operation, the team, the financials, mitigation. And then from there, we'll be able now to move to the next level. If it meets the criteria, we'll now be able to select a coach for you. so that we'll be able to help you to proceed. And everything is on our website. And if you have any challenge, my email is there. I'm the Kenya Country Coordinator, and Wilfred is our East African Coordinator. Thank you so much. We look forward to your projects. And when you log into the Climate Invest, now this is very interesting. What happens if your project is selected? You'll be now moved to the next level, where now the project, after evaluation, your project will qualify for assistance and will be placed on the two categories, either on the development pipeline projects or the investment facilitation projects. So please feel free to log in and submit your projects. I know there are some people who have submitted their project, but they have not followed to complete some more information. So please, we would like you to follow up. And if you have any challenge, please let us know. Thank you very much.
Thank you very much, Patrick. There's a link down there, bit.ly PFAN journey. Please click on that and have a look at it for everyone on the call. It has much more detailed information on what we have to provide. So with that, I think we're already just about 10 minutes over time. I'd like to very much thank our panelists today from Kenya Climate Ventures, that is Eric and Victor, as well as Adam Fitzwilliam from Camco Clean Energy, and Patrick and myself. We hope to hear from you and your projects. And please also spread the word about what is on offer, in case you're familiar with other project developers or business owners who might be interested in the value propositions you've heard from our various organizations. So with that, we want to thank you very much. Please have a good rest of the day, and thank you. We look forward to hearing from you.
Thank you.